Okay, I think I'll begin then. Okay, good morning, everyone. It is a pleasure to welcome you all to this event jointly hosted by the Irish Accounting and Finance Association and the Irish Auditing and Accounting Supervisory Authority on CSRD reporting and assurance. In particular, I would like to welcome our two guest speakers who have so generously agreed to share their expert insights with us today. Before we begin, I just want to note some housekeeping points. This event is recorded and will be shared with all participants, including the slides at the end of the event. We ask all participants to keep cameras on, but mute microphones if not presenting, and there will be a Q&A session at the end of each individual session. We encourage our audience to use the chat function to raise questions throughout the presentation, or raise your hand to raise questions verbally at the end. As you all know, my name is Michael Hayden from IAFA, and for non-IAFA members, I just wish to note that IAFA is an academic organisation with the aim of promoting high-quality research and teaching of accounting, finance and related subjects, including governance and taxation. The association has approximately 300 members, and we run several events throughout the year, including our annual conference and our annual Teaching and Learning Day, and events such as this one, where we focus on contemporary issues facing academia, the profession and businesses more generally. In November 2024, IAFA partnered with IASA to jointly host our inaugural Integrating Sustainability Reporting and Assurance into Accounting Education conference, and that was hosted here at Maynooth University. That was a great success, and it was a pleasure to work with IASA in this important area of sustainability reporting. That successful partnership with IASA prompted us to organise this follow-on event today. As you all know, sustainability is important to us all, including educators, researchers, practitioners, regulators and business. I believe we have an opportunity and a responsibility to show leadership towards sustainability and the climate, as it is one of the most important public interest matters that we have faced. Last year has identified some key issues that we wish to follow up on today. The area of CSRD reporting continues to evolve. Therefore, it is important to have ongoing events for us to keep abreast of developments in this area. Support is also required to facilitate educators embedding sustainability into accounting education, not only in CSRD reporting focused modules, but across all accounting modules and programs. One of the key takeaways from last year's event was that educators require support in identifying resources to integrate sustainability into their teaching, and I'm delighted to announce that today we are launching a directory of sustainability resources. It is great to see that this event has attracted so much attention, and I look forward to the discussions this morning. We have a busy agenda, so I'll now pass you over to Eileen Townsend from IASA to introduce our guest speakers and begin the sessions. Thank you.
Thanks very much, Michael. So good morning, everyone. And on behalf of the Irish Auditing and Accounting Supervisory Authority, I'm delighted to welcome you to today's webinar on CSRD reporting and assurance. It's great to see such strong interest from the academic community on this important topic. IASA's mission is to uphold quality corporate reporting and an accountable profession. And of course, the CSRD represents a significant shift in corporate reporting and assurance. At its core, it's about building trust and transparency in sustainability information. And of course, the CSRD legislative framework continues to evolve at EU level. Just yesterday, the European Parliament agreed its negotiating position on the proposed Omnibus amendments to CSRD, proposing a further narrowing of scope and reduction in some further reporting requirements. Now, Lisa Campbell will provide some further detail on that later, but I think it's important to just recognise that whatever the political and legislative context, the fundamental sustainability challenges confronting business and society remain unchanged. So these issues will continue to shape the world that our students inherit. So preparing them to address sustainability in their careers remains as critical as ever. IASA's role is to supervise the quality of corporate reporting and assurance, and that quality ultimately depends on the knowledge and skills of the professionals who enter the field. So there's a direct link between your work and ours. So the teaching and research you do directly impact the quality of the reporting and assurance that serves the public interest. And so with that foundation in mind, I'm delighted to introduce our two excellent speakers today. So we have Professor Müller, and Max is Professor of Financial Accounting at the University of Cologne. And Max researches in financial reporting, taxation, and sustainability reporting. And he also founded the Sustainability Reporting Navigator tool that he's going to speak to today, an open science platform that enhances transparency and comparability in sustainability reporting practices. And then my colleague Lisa Campbell is Head of Operations here at IASA, and Lisa leads IASA supervisory work across assurance quality, corporate reporting and oversight of Ireland's prescribed accountancy bodies. So we do have a busy agenda today. So we have Max first up speaking to us about the European experience of sustainability reporting. And Max is also going to show the Sustainability Reporting Navigator tool. Lisa will then speak to the Irish experience of Wave 1 CSRD reporting and assurance, and also give an overview of the EU Omnibus that proposes to amend CSRD right up to yesterday evening. And then finally we'll pass over to Louise Gorman, who is going to introduce a set of sustainability resources for IAFA members. So a quick note on format. Each speaker will present for approximately 30 minutes, and we'll follow that with a 10-minute Q&A session. So you're very welcome to use the chat function for your questions as they occur, and we'll also give people an opportunity to raise their hand as well to ask the question that's on their mind. So let's begin. So it's my pleasure to hand over to Professor Max Müller for his presentation on the European experience of sustainability reporting. Thank you, Max.
Hello, everyone. It's a great pleasure to be here. Thank you so much for inviting me in this format. And I've heard there's many also from the academic community in the audience. So it's a great pleasure to meet you for this format. I wanted to share a couple of insights with you regarding a resource that we created. Yeah, 2 or 3 years ago, and it has changed a little over time. And since the beginning of this year, it focuses mostly on the CSRD reports. So our Sustainability Reporting Navigator is supposed to basically track very closely this evolution of sustainability reporting, but it's now currently focused very much on the CSRD reports. But as I want to show you, next to studying how the CSRD has shaped the information environment, we also try to provide other resources that could be helpful both for research, teaching, and or supervisory work. So let me quickly show you maybe some of the key objectives that we have. So what do we do? I mean, clearly, we focus on research, but the Sustainability Reporting Navigator basically mostly, shows the insights that derive from that research. So we deliberately want to speak to a broad audience, a general interest audience. Earlier, I think Eileen referred to the public interest. So we want to make sure that the research is provided in a general audience type fashion, both academics, but also a lot of practitioners, also from the preparers themselves appear to think this is helpful. All of this we do in the kind of under the umbrella of open science. So we try to make data sets, the reports, the tools publicly available in order to hopefully have some form of impact in this transformation that we are undergoing collectively in the European Union. So let me now show you a little bit about Navigator, and then afterwards I want to show you a couple of research insights that we have generated. And I will just post in the chat a link to the website itself. So in your free time, you can check it out maybe yourself. So if you open up this website, okay, you'll actually find, I think, 4 main areas that could be of interest to you. The first one, most people find this kind of the most helpful tool that we offer is the reports themselves. So I think I'll show you we now have more than 800 or so reports that have been prepared under ESRS. We also have derived a couple of benchmarks from these reports. So if you try to see, who has a longer report, what topics are the reports focusing on, for example. The insight section are these little, nuggets that we created based on this data to kind of, I think, interesting patterns that we have found in the data. And the Academy, this is where you find an online course about ESRS reporting that think about a couple of cool videos and an assignment. Currently, we have it up for ESRS E1, so it's an interactive course. But I'm currently teaching my sustainability reporting course, and we had to update it with all of these examples based on these reports. But relatively soon, you'll also have full slide decks available here for all ESRS topics that might be useful for you. Okay, so now let's go through some of these sections. So as I said, the sustainability reports, this covers now roughly 850 sustainability reports prepared under the CSRD. Now, when I came just into this Zoom meeting, Eileen asked me, hey, I looked at the Irish companies because you can filter by country, sector, industry. You can also search by name. I didn't find that many firms from Ireland. And so the main reason for this is that we started this as a crowdsourcing exercise. So in January, we kind of put up a Google spreadsheet that was freely accessible to everyone, and kind of tried to distribute this into the community through social media and asking people, hey, if you come across a report, please enter it here. We will then check it, validate it, and then put it here on our website. And so while this crowdsourcing worked extremely well, it might not cover every particular sector or country in its full depth. And so currently we have RAs also working to kind of make sure that the coverage that we here have is indeed the so-called public interest entities that were in the first wave of CSRD reporting. The only filter that we apply, and I don't think this is relevant for Ireland, but for other countries, the only filter that we apply here relates to the fact that not all countries in the European Union had actually implemented the CSRD international law, including Germany, where I'm from. And so here we had the situation that, you could either report in full compliance or in partial compliance, or you would not have to report at all. And so the reports that you find here are all in full compliance and available in English. And so here you can then basically, just click on the relevant report, and you get some supplementary information directly here for your use. What I would like to highlight, which kind of is maybe also interesting for students or people that want to examine those reports more closely, if you take a look at the length of these reports, you will note that you oftentimes see 3-digit numbers here. So we're talking about quite long sustainability reports. Okay, so these sustainability reports under the CSRD are now embedded into the annual report. And so within those sustainability statements, we have this little AI assistant down here, which basically allows you to select one report or a couple of reports and then ask the report a question. And then, that might be easier for you to then identify information. So you could basically say, I'm here selecting the, Deutsche Lufthansa, the airline company. And then, in the next step, you would basically maybe ask a question, what are the scope 1 emissions of Lufthansa? And then this AI assistant will provide you with an answer and also provide you with the relevant pages from the report that show you where this information has been extracted. And if you think that was helpful, then please use a thumbs up, because that allows us to learn whether it's working or not, because obviously this is not a silver bullet, but it has turned out to be quite useful to identify certain pieces of information directly within the reports. Okay, now the next section, moving from reports, is to benchmarks. And so the benchmarks here, we have basically two variants. One variant focuses on preparers. So I here, because I serve on the Sustainability Advisory Council of DHL, I have here selected a preparer account. So I'm kind of affiliated with this account DHL. And so for DHL, we provide benchmarking presentations that basically benchmark their reporting vis-a-vis a set of other firms. But if you're not associated with a company, you can still get these benchmark reports and then get a feel for, how does the reporting vary across countries, across industries, and so on. So let me here maybe show you some contents of these benchmarking reports. So one aspect that we thought was quite interesting is to basically see how did this first wave actually evolve. So here you see the number of reports in a cumulative way published over time. And so here we would, because this is DHL's benchmarking presentation, we would basically locate DHL here, right, just to get a feel for when did companies actually report. And this is primarily here focusing obviously on firms with a fiscal year, and that is the end of December. Another aspect that we then do is we basically compare the reports in their length. So here you see this histogram. This is kind of the full first wave of companies. And then you can basically see, you know, for this company, DHL, they have 67 pages, but the sample average displayed here is 121 pages. Now, people have complained that the page can have a lot of text on it or not so much text on it. And this is why we also created so-called norm pages, where we basically extract all of the words within a sustainability report and then basically normalize a page to be 500 words per page. And even if you do this, you can see, you know, on average, we have roughly 130 pages, but you see substantial variation here across firms. So, you know, I think there are some firms that only have 30 to 40 pages, and it's still a compliant ISRS statement. And some, as you can see here, have 300 or even 400, right? And so there's substantial variation. So I think that from a research perspective is super interesting to understand what are the sources of this heterogeneity, but also, I guess, from a supervisory perspective, right? It is kind of interesting to understand how did firms maybe from a similar sector come to completely different conclusions about the type of topics that they want to report upon. And so one thing we should note is that most firms conducted the so-called double materiality assessment, that assessment that ultimately determines what they report more or less in vacuum. So they did this on their own, and only now they can start to benchmark, okay, what did other companies actually identify in terms of material topics? So we expect quite some convergence over the next 1 or 2 years in the reporting choices themselves. Okay, now you can also see here that we provide some benchmarks with respect to the country. And so here you can see, you know, Ireland, it's an older version, right? The Irish reports, we only have a couple of them, but they tend to be substantially shorter than those, say, from Spain. This is also true from Germany. One pattern that we found interesting in the data is that if you look below here, who has the shortest reports, you will find, you know, Finland, Norway, Denmark. So especially the Scandinavian firms, somehow they found a way to have relatively lean reports, while others had relatively long reports. I think it's an interesting observation, but it points to the, you know, persistence of, or the importance of national institutions. And so I think probably Lisa will speak on the assurance part of it also, but we also looked at assurance and noted there are really important national institutions that determine, you know, how audit reports look like. And similarly, probably that is the same for the reports themselves, not just the audit opinions. As you can see here, clearly, I mean, larger firms have more to write, right? But here we actually look at a relatively large firm with DHL, it's a kind of globally operating logistics provider that somehow managed to have a relatively short report. Now, these are the type of benchmark reports, and so you get a lot of data that is kind of extractable directly from those PDFs. If you don't like the particular benchmarking that we have undertaken, there's also a dashboard where you can select a company of your choice. So I just did this here with Volkswagen. Apologies for the focus on the German car manufacturer, but I understand Volkswagen is a globally operating brand. And then you can basically say, hey, I want to select specific peers. And I selected, I don't know, BMW, Mercedes, Stellantis, and Ferrari. And then you can basically benchmark their reporting versus the reporting of that selected peer group. And then here you can select different variables that you want to benchmark, like pages, words, topics, how many numbers are included, how many tables there are, how many images, the sentiment. And so if you look at this, all of these are characteristics that we can relatively easily kind of extract algorithmically. So we basically extract all of the text, and then we characterize this text. And this is something we can quickly do. Some of the analysis I will show later, they are not yet included in the dashboard because they actually require tedious hand collection. And so we have relatively big research projects really trying to, in more detail, collect information. But this is not something that we can easily do for 800 reports just in a matter of a day or so. So this dashboard might be interesting to look for anomalies. Now looking at the hand collected data, we then actually said we can have an algorithm look at whether a company talks about a given topic, but this is not as precise as we want to sometimes have it. And so we here basically have, for those 800 something reports, now finished a relatively large data collection on whether a given reporting standard was material, including all of the nitty-gritty disclosure requirements that belong to these standards. Now, those of you who are new to this, I would just like to explain to you that those down here, E1, E2. So in green, I have captured the environmental standards. In this, I don't know, what is it, red, orange? This is social, and G is for governance. And so E1, for example, that's climate change. E2, this is pollution. E3, this is water. E4, this is biodiversity. E5, this is circular economy. So you can see, I think a really relatively interesting pattern in that climate change is material apparently for every company. So also is S1 own workforce, as well as a business conduct. But if you then look into particular other environmental topics, like say pollution or water or biodiversity, that is only something that 30 to 40% deemed material. And that means that they are only 30 to 40% that report on a given topic, right? Similarly, if you look into the social dimension, this is the company's own workforce, okay, material for everyone. This is workers in the value chain. This is affected communities. And this is consumers, and especially affected communities seems to be a topic that few companies somehow circumvented. Maybe it is truly not material, but in other cases, I was sometimes wondering, well, so for example, we have a utility company in Germany, RWE, okay, and they frequently have to resettle people in order to extract coal from the earth, right? And so that is clearly, they have a lot of controversies about affected communities, but somehow they managed their way out of this topic and deemed it to be not material. Now, what can we now do? We can now go into further details, right? And so I don't want to bother you with all of these details. I just wanted to make sure that you understand that we will make this data available so that you can understand who is actually reporting on what, and maybe also trace down the heterogeneity. So what you see now here are those, say, 5 environmental standards. And here you see these DRs. So these European Sustainability Reporting Standards, they basically have disclosure requirements and they are numbered, okay? And so to give you an example, the climate change related standard, it has by far the most it has many disclosure requirements and many so-called data points, so individual pieces that need to be disclosed. And what I wanted to highlight here is one particular, the last one here, DR9 or DR6 for pollution, right? Or DR5 for water. Those are disclosure requirements related to anticipated financial effects. And so they are so low because those were disclosure requirements that were phased in. That is, in the first year of reporting, you would not have to disclose them. But the idea was to disclose them at a later stage. And you can here see how many firms have made use of that option to not disclose this information, at least in the first year. And there's a current ongoing discussion that this is a really, at least from the perspective of practitioners, hard to operationalize disclosure requirement. I was introduced as someone who studies also financial accounting and financial reporting. I would love to see a further integration and a kind of bridge between financial and sustainability reporting information, but that is something that rarely is to be found in the reports. Now, I think to most of us, it is relatively clear that climate change is a topic that is really, really important. But I would also like to note in interpreting those rates here, 97%. So there are only few companies that said climate change is not material for us. And so while that might be fundamentally driven by the, universal importance of climate change, it should also be noted that for this particular topic, right, the CSRD or the ESRS basically say, if you say this is not material, you need to explicitly explain why. And so here we have a comply or explain approach, while that is not the case for the other standards, right? And so maybe it's a good chunk of maybe 10 or 20% of the firms that simply disclosed it, because, everyone discloses on climate, and whether fundamentally there are risks and opportunities arising from a particular business model that truly are material, I think could also be an interesting research question. Okay, so this is the type of data that you will get on a Navigator. Now, I would like to now move on to a couple of pieces of evidence that we have produced so far. The first question is, what has changed? So here we have looked at, and I have tried to provide here hyperlinks to the respective reports. We looked at the 50 largest companies in listed companies in Europe to see how did their reporting change relative to what they reported in 23. So I will note that on average, the reports have become longer by 20%. But even in this relatively small sample, it was interesting to observe that those with the longest reports, so those would be here, they actually somewhat reduced the length of their reports. Oftentimes, those would be firms that previously had separate sustainability reports, which they now had to include or integrate into the annual report. And then interestingly, those firms that kind of were in the mid-range or in the short range in terms of the 2023 reports which they put out, they see the strongest increases. So kind of here you get really forced transparency through mandatory regulation. But on average, you can see that we see kind of convergence across firms, with especially shorter reports catching up. So this is, I think, something that we have seen not just in those 50, but also in other research. Moving on, some of these things, the variables that you saw in the benchmarking part, just quickly, we compared, are there more numbers? Are there more tables? Are there fewer images? And so as you can see, there's a little bit more in terms of numbers, a little bit more in terms of tables, much fewer images, much more use of standardized language, which makes sense given that they now apply the European Sustainability Reporting Standards with a common terminology. The language has become more complex. And what I thought was kind of interesting is that the sentiment, kind of the use of negative versus positive connotated words has flipped. So while in 2023 it was still, more focusing on the positive sides, a focus on potentially negative impacts through double materiality has led to a flipping here. So, and this, if you look into those characteristics, they mostly resemble also what we see from traditional financial reports: focus on numbers, focus on tables, few images, standardized language, complex, and an asymmetry in that we are kind of focusing on or anticipating future negative events and not so much allowing future positive events to be already recorded in the income statement and the balance sheet. So I think you can see from this, sustainability reporting has moved from a kind of marketing PR document type communication to a more, say, boring compliance document. But that boring compliance document means it's now it has now become a nice encyclopedia of standardized comparable information from which you basically extract pieces of information that are relevant to you. So it's less about the narrative, more about getting access to reliable data, and that is comparable. So another aspect that I quickly wanted to share with you is what might change. Now, it was already introduced that there's this omnibus thing. And so it's not just a question which firms are in the scope of the CSRD or not, but at the same time, they're also revising those European Sustainability Reporting Standards. And so based on this granular data of which disclosure requirements do which types of companies report, we have tried to estimate the number of data points that have been on average reported, which is around 557. Benchmark this to the discussion that we had. Okay, it is more than 1,000 data points. So because of the double materiality assessment, on average, most companies actually reported roughly half of those data points. And so we estimate that if those revisions go through, we will see a marked shift to roughly 287 data points. Now, the interesting part of this analysis, which is also hyperlinked below, is that we basically also looked into the so-called quantitative versus qualitative data points. Qualitative, what is this? This is the narratives. These are the narratives. They are also identified as data points in ESRS, right? And you can see that the largest reduction will occur in the narrative domain. There's not so much cutting, I would say, when it comes to the pure metrics. I mean, a little bit too, right? But most of the reduction really seems to target the narratives. Okay. So we talked about what has changed, what might change, and the last piece I wanted to share with you is who might care about these changes. And so we have gotten access to 8 online annual reports, including roughly 200,000 visitors that actually looked into these 8 annual reports. what is an online annual report? I showed you earlier a PDF pages, PDF documents. But some companies also choose to have their PDF online report as an HTML online report in which every page is an HTML page. The cool thing is that now you actually get to see on which pages how many people how many people look at what particular page. And that allowed us to, based on those 200,000 visits that yielded roughly, I think, 500,000 clicks, to then, at least for those 8, study how users allocate their visit share, their time share to the typical sections of an annual report. And as you can see here, roughly 38% of the clicks are on the sustainability statement. So the information that we just saw here. The financials here in orange, this is 22 plus 15, that's 37%. That is both the IFRS financial statements, the IFRS consolidated financial statements that we put in the back end of the annual report, as well as in the management report, the discussion of those very financials that typically occurs a little earlier. So if you look at this, you could say, well, the two are actually on par. So I don't think it is warranted to say no one reads this stuff, right? It is at least as irrelevant or relevant as the financials based on this online report data. And then we can also benchmark this vis-a-vis the content share. So the sustainability pages occupy roughly 44% of the content. And relative to that, I think it's not such a bad ratio, at least if you compare this also to the financials. Now, the final piece I wanted to share with you is, we can also do this within sustainability. What topics are people looking at? And here you see a focus on climate change, a focus on own workforce, which also tend to be the topics that occupy the most space. So if you think this is interesting, feel free to check out the study, but please be aware of the fact that this is only 8 reports, but it's the first time that we see this granular demand data. We typically have a discussion on, the reports are too long, no one reads them, and now at least there's some evidence that some people read them. And I should also note that we have a lot of clicks on our website, so at least there we see public interest for this that might be interesting relative to the deregulation that we currently observe at European level. Now, final piece. We also, for a subset of the users, there's a little mini survey where they are asked, what is the stakeholder group that you are from? Are you an employee? Are you an investor? And so what I think is kind of interesting is to see first, there are many employees that actually look at a company's own online annual report. So I didn't anticipate this, but it seems to be, at least based on the data that seems to be the case. But more interestingly, maybe if you focus on investor, it's kind of the primary user of both financial and sustainability reporting information. 39% of the traffic on the financials comes from investors, while this is only 19% for sustainability, which is, I think, in line with the notion that this is reporting that is, trying to target a broader audience and not just investors. And so maybe some of this is interesting for you. So what have we learned? The reports are longer, more structured and more standardized. They have more negative tone, contain fewer images and more tables and numbers. They differ in the topics due to differences in materiality. I think this is important for everyone to understand, and they will likely contain fewer narratives post the revisions, and they are of similar interest as the financial reports, at least based on the data that we have. And so I would now like to conclude. I thank you for your maybe undivided attention for the last 30 minutes, and I very much look forward to the discussion with you. Thank you again for the opportunity to be part of this year.
Max, thank you very much for that really superb overview of both the sustainability tool and through that the European experience so far. I have to say, you give me a little bit of hope, and optimism, I think, about all of this as well, which is great. I'll give everyone a chance to put up their hand if they have questions that they would like to ask you, but maybe I'll just start and have regard to a particular audience. I mean, your tool is a goldmine of information, and I can already see that both researchers and teaching and from both those perspectives, there's plenty there. But do you have any tips then, either about the tool in particular, about levering that tool in research or indeed in teaching to help students prepare for sustainability reporting and assurance?
Yeah, so I'm sure. I mean, for research, I think it depends on the type of research that you do. Okay, so you might have sensed by the types of statistics that I gave you, I am this regression monkey, empirical, archival, quantitative, not everyone's cup of tea. Okay, but if this is kind of what you want and you want to have all reports directly, for researchers, for example, we have what is called an API that allows you to directly, source those reports. So feel free to reach out if this is something that is of interest to you. In terms of teaching, so I just had my class, and I regularly just have this open and say, what about this company? So we discussed, the notion of consumers, okay? And so interesting part is many companies just report a net promoter score, but then we wondered, okay, maybe there are some companies that have a business model that involves a negative impact on consumers. So think about, I don't know, alcoholic beverage, tobacco, or even pharmaceutical companies that might, have potential diseases. And so then we just quickly went into this. And so what I found is also that for students, this little AI assistant is actually quite helpful. And also because, because it's different from just uploading the report to ChatGPT and asking ChatGPT, hey, help me solve this assignment. It actually directly gives you the respective page, the PDF page, so you can actually check it and thereby also enter into the report. So that might be a nice way to engage them. So in terms of this is how to use the tool, but I would probably always start with a given controversy that exists outside the reports, and then see what do companies actually do about this. That would be more kind of in general motivating the topic. And then when it comes to the nitty-gritty details, I have kind of the audience in my courses is mostly 70 to 80% accounting and finance, and then they're like 20 to 30% they think sustainability report is kind of interesting, but they have a more, say, generalist attitude. But for those that like to understand what is the accounting issue here, I think they're focusing especially on climate change is really, really interesting because I think diving into carbon accounting, now you have relatively detailed information on how the information actually was calculated. You also have what we know from the financials, restatements. They occur really frequently in sustainability reporting, but here they are not a red flag for the capital market to penalize the company because they have been cooking the books. Here it's actually an improvement in data quality because they changed some of the assumptions. And so some of these, I think, can be used really nicely to also help students understand that they still need to treat all of this data with a little bit of caution, even though it's now comparable and standardized, because the underlying methodologies might differ, because here we talk about a great deal of estimates, especially when it comes to value chain data. So those would be just a couple of examples. Maybe this helps.
Yeah, no, brilliant. I mean, and you're also speaking to sort of critical analysis and all of those skills that are so vital as well in supporting sustainability reporting and assurance. I mean, maybe you'd say a little bit about how you approach assessment then for these topics.
Yeah. So I mean, I started with this a couple of years ago, and I have to say the first exercises that we put out, they were kind of boring, simply because we were learning ourselves, and it's kind of, how do you assess this thing? So I then reached out to a couple of other academics, and so I think in terms of the assessment, I mean, I think kind of cases, group assignments work really well here. You give students a couple of questions, to comment on, to analyze the reports, to engage them with the reports. When it then comes to the actual say an exam type situation, if you have covered a topic like carbon accounting in detail, I think the analysis stage is where you can really assess whether someone understood it. So here's the point. How do you compare CO2 equivalents? Okay, so I mean, this is super abstract. Then having people, calculate, say, an intensity, compare that intensity across reports. This is kind of more like FSA type or financial statement analysis type, I think, assessment. Then there is a way at the master and PhD level to think about. So one aspect that I think is interesting is a lot of forward-looking information here if you think about transition plans and stuff, right? And so I think we have a great deal of theory about the extent to which a given, signal is credible or not, right? And so then going through a given transition plan to identify, is this actually credible, right? I mean, what would this transition plan have to satisfy in order to be not just cheap talk, but credible? That could be a way to basically bridge this to classical signaling theory and or cheap talk models.
Thank you very much. I'm just going to check in if there's anyone that would like to ask a question. I'm not seeing any hands up at the moment, but certainly just give an opportunity, because I can keep asking because it's so interesting to talk about either the teaching and research end, but also I suppose on the actual data. There's so much there that we could unpack. But great, Joan, please go ahead.
Thanks, Max. Just a quick question. You said that there's almost like voluntary nature that you're getting reports sent to you, etc. And I'm wondering, have you any plans to kind of make sure that the database is complete in terms of the the companies that should be on it? And the other thing was, it looks like it's providing lots of information about reporting, which it should do. But what about, providing information for, say, that would be useful for other people, like teaching management, accounting, or finance, or something like that there? Is there plans to, extract other types of information from these reports? I don't know if it's available.
Yeah, so so our ambition is to have a relatively complete coverage of the public interest entities that are operating in the capital markets. Okay. So interestingly, at the European level, the definition of what a public interest entity is slightly differs. So, in Germany, that could also include non-listed, savings banks or something. Okay, so I'm just saying we are focusing on those that are in the capital markets and satisfy this public interest entity definition. And I am also sharing a link to a paper that is under development. This is a so-called registered report. So it's kind of a new way of, you pre-register a study, and then the journal gives you, this is good to go. Just exercise or basically conduct a study as is. And so we just got the good to go from the journal, and we will basically then conduct the study plan that is outlined in this paper. And so there's kind of, that will be a whole repository on this first wave. Now, I would also like to say, everyone that finds a report, just let us know, okay, and we will enter it. But we have RAs to ensure the complete coverage. But given that we do this we don't have big grants behind us, and I'm not a professional manager, I'm a researcher. It's a little chaos and startup mode here. But if we work together, maybe that can help. Now, in terms of the other question, I think it is really important that we start to benchmark not who has the longest report, but if we actually start to extract the data. So who has, given comparable business model, who has more renewable energy, or whose energy intensity is better, who has more water consumption. And so for that reason, I think we have collaborated together with machine learning experts to extract this data automatically from reports. And so I will also in the chat post a paper where we have tried to make this data available. We are still working on including it in the sustainability reporting navigator. But I think this would be so much better if we didn't benchmark length of reports, but if we actually benchmark, CO2 emissions or whatever to the extent that it is comparable. So that is the plan, absolutely, to actually use this data. Yeah, thank you.
Great. Neil, yeah.
Thanks. Max, I think we're all super impressed with that. I know I certainly am anyway. I'm kind of blown away by the work that you and your colleagues have put into this. I suppose I had just one question. Have you any sense of the audience in terms of the traffic on the website? Who's engaging? Is it academics, practitioners, general public, students? I suppose related to that, who would you like to be the audience? Is it for everybody, or what are your thoughts?
So I mean, our ambition was just to make sure that not everyone goes through the same tedious process to find the report, and then I mean, everyone does this, right? Students, researchers, right? So just consolidate this in lieu of a European single access point. Based on the registrations that we have around 1,500 registrations, so you can register for free, right? I mean, I would say roughly half come from the corporate domain. So those would be preparers, as well as consultants. Okay. And then you have, I think, academics, maybe 20% or so. Probably a lot of students for their master thesis because they need to provide some cool overview in the, I don't know, airline industry on a given topic. So I think those are probably the users. So to give you a, just alone on our little hobby website, we probably had more than 150,000 clicks in the last 3 months and 50,000 clicks on the reports. So I mean, I don't know whether this is substantial or not. It's hard to benchmark. But in general, we would like everyone to know about this. We try to, through social media, advertise this through the European Accounting Association. But given that everyone is kind of in their own little bubble, some people are reached by it, some are not. But in general, I think we want to lower the entry barrier, especially for those that represent the public interest. Investors, they have information intermediaries. They can get this information no matter what. Okay, either from analysts from S&P or others. But I think think about the media or NGOs, kind of those that represent the public interest and want to hold companies accountable. I think for them, this is a really useful tool because they might not have a Bloomberg terminal. Yeah. But I will say, I think research is also kind of in terms of this accountability camp, right? I mean, usually at the European level, no one really cares about researchers and their needs, but I think we also represent a substantial part of their public interest. But yeah, probably everyone agrees to that.
Everyone in this room for sure. And I think, Hugh, I'm going to give you the honor of the last question. Please go ahead.
Yeah, Max, that was a fantastic presentation. Thanks a million. I think you just mentioned in passing at the end that you consider in classrooms how controversies are reflected in annual reports. And I'm assuming you're referring to controversial issues that particular companies experience. Do they report on them? Could you say a little bit more about that?
Sure. So the interesting part is, I mean, most ESG ratings, they actually also have kind of an area where they track the kinds of controversies that companies are involved in. And the controversy would be mostly defined, hey, there is some media coverage on a potentially sensitive negative issue, right? So if you think about, for example, here in the context of Germany, we have Bayer, and they have acquired Monsanto a couple of years ago. And there's this question about whether glyphosate has cancer consequences or not. So that could be a controversy, or a controversy could be that, in agriculture, if you basically use those pesticides, there might be negative biodiversity impacts. And so these types of controversies that have been brought up by the media, by something bad that simply happened, or by NGOs, right? They are, I think, interesting to study. Like, are companies actually then opening up to that kind of social pressure? So to give you an example, workers in the value chain, this is a topic for which Adidas has received massive negative press. There are NGOs that target Adidas for this, and they are one of the few companies that actually report relatively rich information on workers in the value chain, where the standards themselves wouldn't even mandate them to do this. So I'm not trying to say that this is a great company, right? But I think this is great to understand how given that it's not about just PR and communication anymore, but more, let's say, a more compliance-oriented document, how companies manage this. So I hope this was useful, but I would start with, the ESG rating controversies, because they typically list out in the past 12 months, these are the controversies a given company was involved in. And then you can pull up the press article and then start from that right away.
Brilliant. Max, thank you so much. I know we didn't even touch on the actual data, but we really appreciate you sharing your time and expertise on the topic, and for showing us the tool and what can be done with it, and indeed for answering the questions. I really think that would have been really valuable for our attendees. I think it's time now to turn to Lisa from IASA to talk about the Irish experience of Wave 1 reporting and assurance.
Thanks, Eileen. Just give me 2 seconds now and I will share my slides. Move things around on my screen here. Okay, should be that all look okay? Perfect. Okay, so yeah, as Eileen said, I'm going to talk about IASA's experience of Wave 1 reporting and assurance, and I will there'll probably be a bit of overlap in terms of things that Max talked about, which I suppose underlines the importance of them. And maybe before I start, I'll just say, I mean, that tool, I wasn't aware of it until I saw your slides yesterday, Max, and certainly it's something that we'll be using, I'll be sharing with my teams to use in our work, and I'll share it with our regulatory peers. So you can expect an influx of registrations, I would say, over the next week or so. Okay, so I just wanted to give, I suppose, a little bit of background and kind of context to, I suppose, sustainability reporting in Ireland and what the sort of environment around that is. So CSRD got transposed into Irish law in July 2024. And I've set out kind of a little bit about what the requirements are there, but we probably know what they are. But I think an important point, and Max touched on it, is that Ireland was one of the first, I think possibly the second country in Europe, very, very early adopter, I suppose, in terms of getting the legislation transposed, which at the time was seen as a fantastic idea. However, by the end of 2024, there was quite a few countries in Europe still hadn't transposed. And then, of course, Omnibus happened, and I'll talk a little bit more about that later, but that meant that countries abandoned their transposition projects even. So I suppose really what that means at the end of the day is that their Irish companies had to produce these reports, they had to get the assurance, the audit, the Irish audit firms had to deal with it, the Irish regulator had to deal with it, all in an environment where, I suppose their peers or their competitors across Europe weren't necessarily subject to the same requirements. And I think that's very sort of important factor and that we hear about a lot. So the Wave 1 scope then is for public interest entities, which Max mentioned, and in Ireland we've stuck to the minimum, I suppose, definition required by European law, which is listed entities, banks and insurance undertakings. So as Max said, countries do have the ability to designate additional types of companies as public interest entities, but that hasn't happened in Ireland. So any PIs with more than 500 employees are required to report under CSRD, and that has amounted to about 12 listed entities and 20 Irish companies in total. So 12 listed and then 8 others, which are either banks or insurance companies. And servicing those companies, then we have 7 audit firms who provide the assurance. So just in case anyone's not familiar, I suppose, with the European Sustainability Reporting Standards, the ESRSs, which is the framework, I suppose, against which companies have to report. And I know Max has touched on some of these, but there's 12 standards in total. And ESRS 1 and 2, they have the general requirements and the general disclosures that pretty much every company should include. Then we move into the 5 environmental topics. So climate change, which is, as Max said, it's almost sort of required, through that comply or explain methodology. But the other ones less so. And then there's the social, the 4 social ones, so covering your own workforce, the workers in your value chain, the affected communities, and your consumers, and then business conduct and governance. And I suppose so you can see from this table that there's a big, I suppose, breadth of topics that companies have to consider. And then, and Max mentioned this as well, there's about 1,100 data points in total in the current version of ESRS. Which shows that actually it's not just a broad range of topics, but actually you have to go into them in quite a bit of depth as well. And then the last complication is that you have to report across your value chain. So the value chain is not it is your supply chain, but it's not just your supply chain. So it's all your suppliers, but it's your consumers as well. Anyone who's giving you finance, any business relationships that you have, really, you have to consider and try and consolidate all of the data and report on it as a whole. So it really is very challenging for companies. Now, a company, and Max mentioned this, so you don't have to report on all of these topics. What you do have to do is decide whether they're material or not. And the ESRS is then bring in this new concept of double materiality. So everybody here, I understand, or most people here are accounting academics, so we're all very familiar with financial materiality. So that's the impact, that these issues, so sustainability issues in this case, what impact do they have on the company? So, how much is it going to cost me to upgrade my van fleet to electric vehicles? There's, more storms. Is that damaging my infrastructure? How much is that going to cost me? All those sorts of financial impacts. So it's the sort of the outside in. But then impact materiality is just as important with sustainability, which is the impact that the company has on the environment and society. So just to give some, I suppose, real life examples of this, as you can imagine, carbon emissions from energy production, they'll, contribute to climate change. And so that the company is impacting on the climate, and therefore they have to report on that. Looking at wind farms then, typically you think sustainability, you think wind farms are good, but actually a wind farm development can disrupt the local wildlife and affect maybe the community around. Sometimes people talk about noise and things like that. So you can have biodiversity there, and affected communities can come into scope there. And then, fossil fuel extraction, I think Max, you mentioned you might have to people might have to get moved. There could be pollution, and then obviously we're depleting the resources of the planet as well. So they're all the ways that companies can impact on the environment or society, and they have to report on those as well. And as Max mentioned, I suppose sustainability reporting often sounds kind of negative, but actually companies do have to report on the positives as well. So, it's not just the risks, it's IROs are the impacts, the risks, and the opportunities. So the companies do have to report on all three. So while I think what Max has found through his tool is that the overall sentiment is a little more negative, maybe than for financial reports, but should it be that? Maybe it should be right now, but as we move forward in the journey of sustainability, you'd hope maybe that sentiment will shift to a little bit more opportunity. I think financial materiality, I probably won't dwell on this. I think we're probably all pretty familiar with that, but there's different ways, I suppose, that you can think about it. It's not, companies are identifying new financial impacts that maybe they hadn't thought about before by virtue of doing their sustainability reporting, such as, providing maybe for fines and things like that moving into the future, changing the useful life of their assets and things like that. So then moving on to what does IAFA do? So I think Eileen mentioned when she was introducing me, so we have 3 areas of supervision. So I oversee all 3 of them. So the first one is we supervise corporate reporting. And that's by listed entities only. So we only do that for listed entities. Then we have assurance and audit quality supervision, and we do that for all public interest entities. And then we have oversight of the accountancy bodies as well, and how they do the education, training, and ongoing monitoring. So looking at the corporate reporting supervision then in relation to sustainability, In 2025, we selected 3 companies and we did an unlimited scope. So that means we read the entire sustainability report and checked it for compliance. And then we had one that we selected and we just focused in on a couple of topics. And at a high level, I suppose what we found was that there was no significant issues identified. So we didn't identify any significant areas of non-compliance. What we did find is that comparison is really, really challenging, even within an industry. So if you pick 2 airlines and compare them to each other, they look very different. And I suppose I think Max mentioned this earlier as well. Do we expect to see convergence over time? I mean, maybe, but also maybe not. So Max mentioned Ryanair, and just if anyone looks on our YouTube channel, actually, you'll see that we did a session with Ryanair at an audit committee briefing a few weeks ago, which is on our YouTube channel, talking about their sustainability reporting. But if you compare Ryanair, which is a low cost airline, to another airline which is not a low cost, they probably have different characteristics that will make their sustainability reporting look quite different. And even the way they report on things like emissions and stuff like that, about whether they do it sort of per passenger, per mile, and those kinds of things, they vary. And so it's actually quite difficult, much more so than we have typically found with financial reporting. And then what companies have told us is that they found it really difficult to tell the story of their sustainability journey, because the standards are so prescriptive, because they have to comply with all those data points. They have to include all of that in such a prescriptive manner, that actually they found it very difficult to sort of do that sort of step back, I suppose, and tell the story of what they were doing, what they already do, and what their journey is into the future. And one thing we have seen come up is that companies then will have their CSRD report, which is in their annual financial report or the annual report, as Max mentioned earlier. But then they might separately have something else, some other quite visual, much shorter, 10 to 20 pages, very visual, very engaging, talking about sustainability. And that's fine, that there's no laws or rules against that. But I suppose from a public interest perspective and an investor protection perspective in particular, ensuring that people understand that those glossy reports are not regulated. Sometimes they have assurance, sometimes they don't, but in either case, they're not regulated. And I think that's an important distinction, to be aware of. So it's probably a good message for your students, I suppose, if they are doing research, if they see a company that has these 2 reports, one is regulated, one isn't. So I suppose what were when we talked to companies, as we went through the process, what were the things that they told us, I suppose, were really important and their key learnings from wave 1? I think one thing that came up quite consistently was that, historically your annual report was done through your finance function. Very clear path, up through your accounting, into the CFO, onto the board, and dealing with the audit committee. When it comes to sustainability reporting, though, you have a much wider cohort of internal contributors. So you need a lot of operational input, you need some legal input, and you still need the finance people to pull it together largely. The audit committee still oversees it. But there's a lot more, I suppose, interaction between those units. Which then kind of leads on, I guess, to the second point, which is that the data quality and the systems for collating and collecting the data are really critical and expensive in lots of cases. So, that's an issue for companies. But, if you are getting data from an operational person who has never experienced an audit, for example, do they understand the rigor and the evidence requirements around, providing this information into that very formalized process? So I suppose early engagement across the board with all of those people internally who have to do it, with the board, with your audit committee, with your auditor, with your statutory auditor, and with your sustainability assurance auditor. And the double materiality assessment it's absolutely fundamental, because if your double materiality assessment is wrong, everything else flows from that, and everything else will be wrong, or at least incomplete from there. And it takes a long time. So it's not, double materiality is not something a company can decide on its own. They have to engage with a multitude of stakeholders. Everybody, you know, from their consumers, as I said, their financiers, the supply chain, the communities, and there could be NGOs. So each company, you have to start out with identifying who are your stakeholders, and then you have to engage with them. Now, the way companies have done those things varies drastically. But if you don't get that right to begin with, then you know there will certainly be problems later down the line. Moving on to assurance then. So all of these reports then have to have an assurance engagement done and an assurance report attached to them. So these assurance reports can only be provided by people who are registered to be sustainability assurance providers. And in Ireland, only statutory auditors can apply to be registered as sustainability assurance. So SASPs is what we call them for short, Sustainability Assurance Service Providers. So in other countries, you can have something called IASPs, so Independent Assurance Service Providers, but that was a member state option which hasn't been taken in Ireland. So people who are statutory auditors today, they can obtain registration as SASP if they do about 60 hours of education to gain the requisite knowledge that they need. However, after the 1st of January 2026, anyone who becomes a statutory auditor after that date will have to undergo a written exam and get 8 months practical training. So pretty onerous. And the idea, I suppose, is that everything, so the reporting and the assurance, is put on an equal footing to the financial reports and the audit of the financial reports. So really the aim of the legislation was to make the two equivalent. And then in terms of the framework, IASA, so Eileen and her team look after the standards. And so we adopted a standard that all the assurance has to be done in compliance with. So we took the international standard called ISA 3000. There is another standard which was still being developed, I suppose, when we adopted ISA 3000. That's more specific to sustainability, but we haven't adopted that in Ireland for now, at least. So I suppose we took a slightly different approach to the inspection of sustainability assurance than we have done for our audit inspections. Really recognizing the fact that this was new for everybody. So the firms were developing the systems, they were learning on the go, so were we. They were dealing with clients who were developing the systems and learning on the go. And so we wanted to be as supportive as we could to achieve, I suppose, the highest quality outputs that we could, you know, to whatever we could do to support high quality assurance was what we wanted to do. So we held roundtables for the firms for a long time, and they're still ongoing, but well in advance of the work being done, where, you know, things as different questions on the legislation or the standards cropped up, we could talk about them. We mightn't necessarily have had any answers, but at least we knew we all maybe had the same question, and ideally could come to a common understanding. Then what we did is we asked the firms to give us their methodologies, which were still in draft in some cases. And what we wanted to do was review those to be able to raise, if we had any concerns, if we thought there was any gaps, that we'd be able to tell the firms that before they ever started the work. Again, because that was the best for the quality outcomes. And we didn't have any concerns, you know, when we did that review, the methodologies were all pretty good. Then what we did was we did walkthroughs of the system as well, just so we were all kind of up to speed on exactly what it would look like. And before we started, we did an awful lot of internal training as well for our inspectors, to keep them, either get them up to speed and keep them up to speed. And I suppose before we actually got to look at a sustainability assurance file, Omnibus had arrived, and I'll talk a bit more about that later, but that was sort of in the background to our work all the way through, as well as the the bit that I mentioned earlier around the fact that there was other European countries hadn't transposed, and so there was no requirements at all. And actually, even in countries that had transposed, after Omnibus was announced, various regulators decided that they weren't going to do any regulatory work, even if the law had been transposed. And so we were very cognizant of that, I suppose, that we didn't want to be too burdensome, but equally we had a legislative responsibility. So each of the 7 firms who provided the assurance to those PIs who were in scope was inspected, and we picked one engagement in each firm. And the engagements that we picked for sustainability assurance, we also looked at the statutory audits for those entities, because we wanted to consider, I suppose, if we saw something in the sustainability report, had that been considered in the financial statements as well. And what we found was that we didn't have any significant findings. What we did find was that the firms had really done a very extensive amount of work. And certainly, and firms were criticized, and it was suggested, I suppose, pretty widely that they were doing too much. Now, I certainly wouldn't make such a statement. That would be not something you would often find a regulator saying, I would imagine. To me, year 1 was always going to be challenging, because the double materiality was being done for the first time. And so one of the main criticisms actually that we've heard was, I spent an awful lot of time justifying to the auditor why something wasn't material. And companies couldn't understand why they had to do that. Well, some could, but there was a lot of companies who were like, this is a waste of my time. Why do I have to do this? It's not material. But the point is, if a company had missed out on something that was material, that's a major flaw in their sustainability reporting. So the auditors were required, both by law and by the standards, to do that assessment to make sure that that list of material topics was complete. So what were the learnings, I suppose, from this? And when we do our inspections, I should say, we also engage with the audit committees as we're doing it, and we say, what was your experience of the audit or the assurance in this case for sustainability? So some of this, is kind of coming from them. So I think, and the first one really comes from those audit committees, just saying that the assurance process in year 1 is very onerous. And they do have to do that assessment of completeness and the accuracy of the double materiality, and that does take a lot of time. Again, and very similar to what we saw on the corporate reporting, this idea that you had new stakeholders who had to be involved outside of the finance function, and did they understand what it meant when an auditor or an assurance provider is asking them questions, and I suppose the burden of proof, or the evidence that they had to provide for that, and that was definitely new and possibly challenging in some cases. And so I suppose internal training for those people, I think, would be good. And then, as I said, and I mentioned this earlier as well with the corporate reporting, the importance of the connectivity between the two. So I mentioned earlier that, as companies were doing their sustainability reports, they did find things that they actually had to go and then reflect in their financial statements as well. And so there's sort of a loop there. Because you have to consider it both ways, I suppose. So making sure that loop is continuing on an ongoing basis. So, and my process for pulling out the observations on the listed entities in Ireland is nowhere near as scientific or impressive as the reports Max showed us earlier on, but I just thought I'd pull out, I suppose, some observations specifically on the Irish listed entities, which I mentioned there are 12 of them in scope. So the reports went between, the shortest one that we had was 71 pages and the longest was 182. The average was about 104. So the most common topics are probably no surprise to anyone: climate change, your own workforce, and then business conduct or governance. The least common topics probably also wasn't all that surprising. Affected communities, water, marine resources, biodiversity, and ecosystems. So they were the ones, I suppose, that we saw least. None of the assurance reports were qualified. So all the assurance, and initially when CSRD was discussed and it was coming in Ireland, all of the discussions were, well, God, all of these assurance reports are going to be qualified. So what use are they going to be to anyone? And I think what that means is that, you know, companies got where they needed to go in the end, as did the assurance providers. And in the end, there was no qualified assurance reports. All of the companies in Ireland, except one in year one, use their statutory auditor for sustainability assurance. So you can have different people. Your sustainability assurance provider can be different to your statutory auditor. But only one company took that approach in year one. And actually they have decided to revert to their statutory auditor for year two. And that makes sense to me because there's a lot of duplication, frankly, and overlap. So, you know, in order to do both statutory audit and sustainability assurance, you need a really solid understanding of the company, the business, the structures, the people. And so, you know, if two different people have to get that understanding separately, that's very onerous, both on them, but on the company as well. I think Eileen said this, that she was heartened by what Max mentioned about, you know, the interest in sustainability topics. What companies have told us in Ireland is that as far as they can see, there's very limited engagement, and maybe it's an Irish specific thing. That they, you know, lots of these large listed companies, they'd go on road shows, you know, to meet their investors when they issue their annual report. And what they were telling us was they weren't getting engagement from investors, they weren't getting questions. They occasionally had people, you know, asking the companies who decided not to have that separate sustainability report that they would have. And I think Ryanair mentioned this actually on that webinar that you can see on our YouTube channel, that, you know, they would have had investors calling going, well, where's that sustainability report that I looked at last year, and didn't appreciate that it was now included in the annual report. But you know, hopefully, I suppose over time, as investors become more familiar and there's a bit more kind of reporting and possibly a little bit more comparability, we might see that develop over time. And then just to touch briefly on what are we going to do in 2026. And you know, this was discussed at a fair amount of length, I suppose, in both internally and with our board, considering various factors, you know, about Omnibus, the fact that we didn't have any significant findings, the ongoing uncertainty, and all those sorts of things. So what we have decided to do is we're going to continue our work. So we plan to do 2 unlimited sustainability report reviews. Of course, we might do some focused if we spot something that looks like it might be interesting for us to investigate a bit further. And this year we are reporting on a thematic basis, which means we're not naming the companies that we looked at, but from next year we will name the companies that we looked at and give the precise details of what our engagement was. We'll continue to do our sustainability assurance engagements, 1 per PI firm. We're not going to report those on using the name of the audit firm for various reasons. But a very big part of that is the fact that there are firms that only have 1 engagement, and we typically don't say the name of the audited entity that we inspected, because you can have a flawed audit and your financial statements can be perfect. So we don't ever want to identify the audited entity in our public reports, and that won't be possible, I suppose, with sustainability. And obviously we'll need to consider the impact of Omnibus, which I'll talk about in a few minutes. So yeah, I think that was all I had. So open it up for Q&A now. I'll stop sharing.
Okay, Lisa, thanks very much. I'm just going to chair this particular part, so we have got some time for some questions, but really just first of all, on behalf of everybody in the room, to thank you for a really brilliant review of what's happening in Ireland, which really adds to Max's, but it gives us a context, because I'm sure a lot of us who are teaching this sort of stuff are going to bring in the Irish aspect. I'm particularly interested, I don't know what other people in the room thought, in the key learnings, the 2 slides about the key learnings, because it kind of goes way beyond, Lisa, what's required to be reported. You know, it goes beyond the standards. It goes beyond really hidden things that you've uncovered, Lisa, that so the question I would like to pose, the first question, which is really based on those key learnings, what do you think these key learnings and your experience kind of means for academics who want to address sustainability reporting and assurance in their classrooms?
Yeah, and I think really it's about if I think of how I learned, so I'm an accountant. I worked in audit for 12 years, and when I think about my university education and then the professional accountancy education as well, how I learned IFRS, I learned the specifics of the standards and exactly how I would do it, and you do your case studies based on that. Very, very quantitative, I suppose, is really the bottom line, rules based and quantitative. And I think really the key with sustainability is it's much broader than that. You can't be as quantitative. You really have to bring in lots of the qualitative stuff. You have to have a better understanding of governance. You have to be thinking about data and systems. And that kind of double materiality, as I say, it's not just a one-way street about, how much money is this going to cost me into the future. It's about, understanding the business, and how the business is structured, and then, what impact the company is therefore having through that structure and business and operating activities. And so yeah, there's much more qualitative and general business, I suppose, understanding that's needed. Back in my day, I suppose, well, actually, I was probably pre-IFRS even, to show my age. But the standard was a standard, and it didn't matter really what the company was. And I think that's very different under sustainability.
Yeah, it always reminds me of like a change management process that's going on, and it's not the standards, it's all the systems and the processes and the champion and all these things. And we should really try and investigate if there's a way to capture what you've found there, because I think that would be useful to bring into our teaching, actually. So Louise is the next one for a question, and then we'll go to Niall.
Thanks, Joan, and Lisa, thanks so much. That was so interesting. I have a ton of questions. I won't ask them all. But just in your work, did you encounter much about tests of controls or any insight into the quality of internal controls that are in place over sustainability data and information within these companies?
Yeah, and I think it's not the main focus of our work, of our testing, but of course we see it, I suppose, as we're doing our work. And I think when I mentioned about, not concerns, but the challenges, I suppose, in the data quality, and systems. So really, I suppose the financial control systems are very well established. They're, lots of focus on your segregation of duties, your review, supervision, all those sorts of things. And that is different and involves different players when you talk about sustainability. So those operational people who maybe had never had to deal with that before. And so I think those control systems are still developing. They're in the early stages of developing. So we'd expect to see it become a little bit more business as usual, moving forward. But I think right now, those control environments are pretty immature still.
Okay,
That's
so
a very quick one. Just
yeah, okay.
biodiversity, you noted that biodiversity was one of the ones that wasn't reported on very much. Do you think that's more a symptom that there was a lot of opt-outs or there was a lot of reliefs on some of the biodiversity standards for the first few years? Because you would imagine in a country like Ireland, biodiversity should be a material topic for a lot of companies, and it doesn't seem to be.
Yeah, it's hard to know, I guess. I suppose for the ones that we looked at, which is a small number, I guess, we were satisfied with the people who said that biodiversity wasn't material. We were satisfied that they had done a rigorous exercise and assessed that. And similarly, none of the assurance reports were qualified, so clearly the audit firms were satisfied as well. So it could have been, yeah, just opt-outs who don't have the information yet, or it could have been that they'd, you know, they had done a full assessment and deemed it not material. Yeah, and you know, I suppose materiality as well when you think of that. So say biodiversity. So I remember when the first time I read the biodiversity standard, we were doing an internal training session on it, and we have an office in Naas, and I was saying, God, oh, geez, when this office was built, surely there, because sometimes we'd see rabbits running around in our car park. And I was saying, surely we disrupted the poor rabbits when this building was built. Well, now number one, it's not an IASA building, so that's one aspect, I guess. But you know, it had happened. But even if it was a new building, is that material? You know, a few rabbits, and if they've built a little rabbit hut over in the corner, you know, is it material to a company? It's very subjective. So I think we might see it develop over time. But I think at the moment, the explanations given were deemed reasonable.
Thanks.
Okay, thanks, Louise. And Niall from Barclays has added a question in the chat. I think it's about the timelines, really, isn't it, Niall?
Yeah, thank you, Lisa.
you
That's very interesting. Just you commented on 2026 supervision plans. One component of the CSRD reporting for 2026, similar to 2025, will be the taxonomy reports. There's a delegated act going through the EU at the moment that the EU has until, I think, mid-January to object or not object. And then if they don't object, it gets published after translation in the EU official journal. But as far as I understand it, it's not officially law until it's published in the EU journal. Do
Correct.
IASA have a view as to whether they will review based on the rules prior to the amendment to Delegated Act, or would companies typically be allowed to use the new rules if they haven't been objected to, but they're not in the EU official journal? Or is that too detailed a question?
No, it's not, and I will touch on it in the Omnibus section of the presentation. I won't talk specifically about taxonomy there, but unfortunately all of the Omnibus reliefs aren't available to be used by companies for their 2025 year ends. So unfortunately, we still have to do the more onerous requirements both on taxonomy and on the ESRSs, unfortunately. Now we try to be as proportionate as we can. So if we encountered a company, you know, and they had left out a small data point, for example, on ESRSs, which we knew was going away under revised ESRSs, we would of course note that that was in breach of the standards, but would we, you know, take any significant action on it? No. But unfortunately, yeah, the law is not going to have been changed by the end of the year, which is when the reporting date is for most people. Yeah, it's very disappointing for companies.
All right, thank you.
Okay, thanks. One final question from Elaine, and then we'll move on to the next section.
Thanks, Lynn. Thanks both Max and Lisa. It's absolutely fascinating stuff. I suppose it's not necessarily a question, it's a bit more of a comment. For those of us teaching accounting, financial accounting, I suppose I'm struck by what Lisa said about, you know, obviously the auditors and providing assurance and, you know, 60 hours of training versus the 3 months. So I teach first years now, and I'm looking at, you know, what job they're going to do when they go out potentially. But there's very little room in our curriculum for sustainability reporting because it's not coming in under the exemptions for the accounting body. So I suppose it's just a comment really that we are trying in UL to introduce it everywhere we can, but there's very little space in our curriculum because of the exemptions requirements. So I suppose it's just something to flag that for IASA, maybe to put pressure on the various institutes to integrate that into, I suppose, the mainstream training, and then allow us the space maybe to look at teaching this stuff, because I'm looking at our first years now going out eventually in 4 years' time into auditing, and they're going to have to be able to do this stuff.
Yeah.
Just a comment on that.
Yeah, well, I maybe just to respond to it, I suppose it's you know, I think that the accountancy bodies have exactly the same challenge. You know, the law is quite prescriptive around the education requirements for auditors. Auditors are mainly dealt with in the law. And you know, they have exactly the same challenge, squeezing sustainability into their existing curriculum is extremely difficult, and especially for people who want to be SASP, sustainability assurance providers, to meet that requirement where you have to have basically the same as if there's probably a lot of chartered accountants in the room, your FAE exam for chartered accountancy, you have to have the same equivalent exam now for sustainability assurance. So how they fit that into the existing 3-year training contract is extremely difficult for them as well. So it's an ongoing focus, I know, for themselves, and then obviously they're always conscious. They always tell us about, they do always tell us about the worries and struggles in the universities as well. So they are always considering, I suppose, that flow, the way that flows up and down. But it's just very challenging with the way the law is written, unfortunately.
Is there a practical aspect though as well, in that given the pace at which sustainability reporting requirements are evolving, unlike say the pace that depreciation rules are evolving, I expect it's easier in academia to teach about depreciation and amortization of government grants and earnings per share than it is about sustainability reporting requirements, because the pace of change is so different between the two.
Yeah, exactly. Yeah, I mean, if you're going to set an exam for a student in 2 years' time, you don't even know what the ESRS
Yeah, exactly.
don't know what they say as of today. So yeah, it is absolutely the short timeline between when the law and the standards are available and when education is expected to have been delivered is incredibly difficult.
Okay, well, thank you, Lisa, and thank you everyone for all your questions. So we'll hand over to Eileen again for the EU Omnibus proposal section.
Thank you, and I will hand straight to Lisa for a whistle stop. Only Lisa, we have 10 to 15 minutes on the Omnibus. Thank you very much.
So give me 1 second now. Look at my yeah, that's working okay. Okay. Yeah, so we could be here for a week probably talking about Omnibus, but we'll try not to do that. Okay, so I suppose what is Omnibus, or why did it come about? So the CSRD rules, and I mentioned earlier, they came into effect in Ireland in July 2024. And in September 2024, there was this report called the Draghi Report, a report written by a man called Mario Draghi, who wrote this document about competitiveness in the EU, and that being an innovator or an entrepreneur or an SME in particular, but any business really in the EU is challenging. Around the level of EU regulation and requirements that are on businesses in the EU versus other parts of the world. And so the European Commission, in response to that, then said, okay, well, we need to ease the burden on businesses like across the board, not just in sustainability. But obviously, at that time, there was a lot of discussion about how challenging sustainability reporting was and how costly it was as well for business. And so the European Commission is doing a series of omnibus packages. And the first package of omnibus legislation is dealing with CSRD, so corporate sustainability reporting, but also the due diligence. So there's all sorts of, kind of jokes and analogies about buses and which pieces of legislation get on which bus, but CSRD and CSDD are bus one, so Omnibus 1. So a couple of things have already happened. So waves 2 and 3, so there was supposed to be an additional set of companies coming into scope for December 2025 year ends and then again for 26. They have both been postponed. So it's called the stop the clock provision. And they also stopped the clock on, Max mentioned earlier on that there was, a base set of disclosure requirements, but then there was additional requirements due to be phased in the ESRSs. They have also been stopped. And then they're also negotiating then what the final CSRD will scope and CSDD, what the scope will look like. So the aim that they set out in February 2025 was to take out about 80% of companies from the direct scope. the plan is to complete negotiations by the end of 2025, but that's certainly challenging and I would say not guaranteed. And one of the benefits, I suppose, one of the other big whys that we hear from companies as well is that companies were needing to put an awful lot of resource into the reporting, and they had less room and resource available for actually doing the behavioral change that they needed to do, to save the planet, I suppose. So it frees up those resources. So where are we with the scope? And this is the status, which literally changed yesterday. So this is, I think Niall mentioned, the constant change. The negotiations are very tense on this topic. So CSRD, the original legislation says companies with more than 250 employees and a pretty low turnover, I think I'm going to say 50 million, I could be wrong on that. So there was going to be thousands of companies coming into scope. They estimated about 80,000 companies across Europe. And so they are pulling back drastically on that. So what the European Parliament agreed yesterday, after quite a bit of drama in the last few weeks, is that it will be companies who only have more than 1,750 employees and 450 million turnover. They're the only companies, so a much, much smaller scope. So the pies that are in now, some of them will fall away if they don't have that level of employees and turnover. This is Ireland specific now. Well, actually, it'll be the case across Europe. There will, however, be private companies who breach those thresholds who will come into scope new. So there will be new companies, I suppose, who have to do this in the future. Now, the discussions yesterday didn't mention the thresholds for non-EU companies, and we haven't seen the draft legislation yet. But at the last check of the draft legislation, it was applying to companies with more than non-EU companies with more than 450 million turnover. That could be different, and they could have changed that yesterday, but it wasn't in the press release. That is still subject to change. It's not done. It is now going into what's called a trilogue process. The aim is still to finalize it by the end of the year, but the negotiations have been quite tense to date. And what the media reports is that you still have countries who want the thresholds to be pulled down and other countries who want it to be pushed up even further. And so literally yesterday it went from 1,000 to 1,750 in the space of about 2 hours, I think. So could it change again? Absolutely. In terms of the reporting standards, and Max mentioned this morning as well, so they are also being revised right now. The aim again was to reduce the mandatory data points by about 50%, and there was lots of other aims. So being able to improve readability, streamline, clarify questions on the double materiality assessment, those sorts of things. There was also an intention, work had started on sector specific standards. That has been abandoned, which isn't necessarily welcomed by all. There's lots of people who believe sector specific standards would actually be helpful to the market, but they have been abandoned for now. In terms of changes to assurance, the initial CSRD said we'll start with limited assurance, but maybe in 2028 we will move to reasonable assurance. That prospect has been removed. The European Commission was also due to adopt an assurance standard that would apply all across Europe. That has also been removed and replaced with an intention for the European Commission to adopt targeted guidelines. Again, I thought the reasonable assurance would be very welcomed. It actually hasn't been. It hasn't really been welcomed by companies. Lots of companies feel that reasonable assurance would be a good thing. There certainly has not been a welcome widely on the move away from adopting a European assurance standard. I think most stakeholders think that would be a good idea. The other big part of what they're doing is with that focus on SME, and one of the big criticisms of the original CSRD is the problems for value chain reporting. So if you are, for example, a relatively small food supplier somewhere in the west of Ireland, you're probably supplying into Musgraves, Dunn's, Tesco's, and all three of them need to gather information from you because you're part of their value chain. But they might have been asking for it at different times, for different time periods, in different ways. And so it was really very, very burdensome on those small companies that are in the value chain. There's also lots of companies want to do voluntary reporting because maybe they can get cheaper finance just because they think it's the right thing to do. So there's a lot of voluntary compliance happening in the market. And so the revised CSRD is focusing on that, putting limits on what companies are allowed to request from their value chain, particularly for SMEs, and also just trying to standardize what the reporting might look like if you do it voluntarily. Now, the considerations for business, which we've just touched on there with Niall. So unfortunately, all of these releases are coming, but they are not going to be in place for the 2025 year end. So companies who are in scope still have to comply with the full ESRSs as they are now, even though we should know what the new ESRSs will look like. You know, one of the aims here has been to reduce burden on companies, but in reality, this sort of constant change and uncertainty is very difficult to manage and is in itself a burden. And so that's very, very challenging for companies to deal with, especially when it's not even happening at the same time or in the same way across Europe. That's very challenging. And then you'd have to wonder, I suppose, about the implications for future EU legislation. I mean, regulators and auditors or assurance providers went to great efforts to encourage companies to start this project early, noting how onerous it was and how much was going to need to happen, I suppose, to be ready to report. And they invested. So, I mean, we hired people in IASA. We know that the audit firms hired a lot of people to do all of this work. Companies hired people, and then overnight, you know, those things were kind of taken away. And I suppose you just wonder the next time there's a significant piece of EU legislation coming, how many companies are going to, I suppose, engage early and get ready, or, you know, will they wait until the last minute because who knows what's going to change. So it's while it's aiming to reduce burden, it is being fairly widely criticised, I suppose, in the market. And then, so I suppose just in light of Omnibus and everything really that we've talked about this morning, what is the call to action, I suppose, from IASA to all of you as academics? And I know we touched on the challenge with it being able to embed this into your curriculum, which we absolutely understand, but, you know, finding ways to build it in wherever you can. You know, we'd really encourage that. If you're doing audit courses, ensuring that you're also addressing assurance, which is a little bit different, that would be good. A suggestion, I suppose, would be, you know, wherever you can, partner with industry and get real life case studies. You know, like lots of companies are very open to coming in and chatting, or to providing documents, you know, that they would give to you as professors, you know, where you can really make this stuff real to your students. Because some of it, especially, I mean, if you pick up an ESRS and you read it, I mean, it's, you know, it's very difficult, I suppose, to understand what it looks like in reality. So being able to get those real life case studies, and now that we have reports as well, that helps. And just to reiterate that it isn't going away, you know, sustainability isn't going anywhere, it's staying. And it's important. It's important for the planet, but the rules as well aren't going anywhere. And I think, as we've mentioned a couple of times across the morning, there's lots of opportunity for research, and please keep us posted in IASA, you know, as research is coming out, because we do read it and we're very interested. And yeah, I think that's it then. So just open for questions if we have any.
Great, thank you. I'm really conscious of time, but what I would love to do is ask Max just whether you have any additional perspectives to what Lisa has outlined on Omnibus, you know, in the broader European or even the German context, perhaps.
Yeah, sure. Just briefly, I think I earlier said this. I think, this is kind of now sustainability after the hype. The way I experienced this in Germany is we are in a complete phase of deregulation. This is in part also triggered by what happens over the Atlantic in the US. And so I think what business, I mean, I'm not saying what students and society at large, right? But I'm just saying, I think businesses are under enormous pressure, in a competitive pressure, and to stay competitive, If and so that's, I think, a big challenge, a big challenge to maintain these sustainability commitments, the sustainability targets, even if there are many competitors that don't need to abide to the same rules, to the same kind of carbon pricing. And so I think this is in a way this is problematic, and I can see why some firms therefore change action. On the other hand, I think, if we are educating tomorrow's leaders or tomorrow's students and so on, ultimately as a society, we somehow need to turn this around. And I hope we will find a compromise that actually makes sure that we reach a consensus, and whether it's through transparency and reporting or through pricing or whatever it is. But I have 3 kids at home, and I don't know how we will manage this with this current approach. But I think everyone can make a difference, and so engaging students about this, telling them about this, so they can make better choices, maybe a start.
Okay, thank you for that important reflection. Absolutely. I'm sorry we don't have time for questions because I'm really keen that we get to the next part. But Lisa and Max, thank you so much for your contributions this morning. I'm tempted to say there's another 3 webinars in my head arising from what has gone on this morning. But what I would like to do now is to pass over to Louise Gorman, because Louise has a really interesting initiative to talk about for IAFA academics. So over to you, Louise. Thank you.
Thanks, Eileen. I suppose in the interest of time, I'm just going to share my screen and have this up. But we're delighted and particularly thankful to Eileen and everyone in IASA for your help in. Can you see my screen? Yeah, for all your help in pulling this directory of resources together. So we've spoken at our event last year and again this morning about the challenges in embedding sustainability into accounting education. And I suppose every piece of help that we can get in doing so is of enormous value. And it's not just even space on the curriculum, it's how to teach the material and so on. So we'd hope that everything that's included in this directory, the various different aspects, will in some way be of assistance to you in incorporating or at least beginning your journey on bringing sustainability into accounting education. So in this directory, which will be shared with you all today, it'll be available on the IAFA website. Really, there's a lot of stuff. So the textbooks, so up to the brand new Richard Barker's book is out in 2026. So the link to pre-order the book is even there. To online books, I'm not sure how many of you are familiar with Accounting Streams. They have, I think, about 2, if not 3 chapters in the financial accounting area, bringing in sustainability, and also a chapter of management accounting, in which we don't have as much. Links to, you may be aware of the amendments that have been made to the international education standards and how we're a stronger focus on behavioural competencies. And that's really what sustainability and sustainability reporting and accounting for sustainability is about. It's about bringing students into a space where they're systems thinkers rather than just focusing on profit and capital and at the firm level and thinking about the bigger picture. So there's resources there as well, links to networks and the Caesar network, LinkedIn groups that you can follow, free education for yourself before you begin to educate as well, such as courses provided by the UN. I could keep going. Resources from IFAC, how to adopt various concepts we're already familiar with from accounting and finance to the sustainability area. So I suppose I'll talk and talk. I may as well scroll through it, but as you'll see, a very long reading list of books, all very recent, and ones, as I said, we'd be more familiar with authors as well, like Jan Bebbington, Ian Thompson, but they're all listed in there that you can access any of those books that you need. Equally, then moving into the standards that we've mentioned today, like the ESRSs and the VSME, we would have heard of. Equally important, particularly maybe for NI members on the call as well, the ISSB standards, which are going to be phased in the UK, and will inevitably have an impact in Ireland too, because they're our close trading partner. So they're all linked in there. The new standard that we'll be meeting soon, the ISA 5000, the new audit standard, as well, not just the standard, but supporting materials so that you can get familiar with that standard as well. Since the Omnibus, I have heard that some companies have gone back to some voluntary frameworks. So in there, the GRI, the TCFD, all of the voluntary frameworks that were here before CSRD, and the Knowledge Hub and all the resources around them as well. So I've mentioned what IFAC have done with the education standards, but there's some information there. And as I mentioned, the Accounting Streams website is brilliant too. Videos, podcasts, all your links to Caesar, and I forget anything. The charter of all of the professional bodies have great sustainability information on their websites as well. I know Chartered Accountants Ireland provide a glossary of terms. They provide a weekly newsletter. It is a rapidly evolving area, as I'm sure everyone is aware, so it is important to stay in touch. Questions and answers on the Omnibus, so as these developments evolve. And as I said, like existing frameworks, so you'd be familiar with COSO from risk management in a traditional sense, but we do now have sustainability risk management. And I suppose as I'm speaking to that, it is important. We've spoken to the challenges in sustainability reporting. One area maybe that doesn't get enough attention, and it is evolving, is this issue of connectivity between the financial statements and the sustainability statements. And the IASB are working on the IFRS standards, not just their sustainability standards. So we're seeing they're doing some work on IAS 37 and climate related commitments, about disclosures around materiality under IAS 1 and IFRS 18. So there's a lot happening from an accounting perspective as well, bringing in sustainability from that area. So it is important that we think about it from that angle too. And then, as we said, it's certainly not anywhere near to Max's resources, but our Irish firms, all of our reports are there. And again, you'll have Max's resource as well, which will be fantastic. And some of the accounting journals that will cover quite a bit in the area of sustainability, and more networks that you can join, as well as what our sister organisations are doing. So the EAA has a workshop in January, and the annual conference, all of the annual conferences typically have really strong sustainability streams as well. And then all of the legislation we would have referred to today is linked in there too. And yeah, just some further additional resources. But again, I can't thank our colleagues in IASA enough for their help with this, because you all certainly made this possible. And thank you to everyone for giving me your few minutes of attention. So I'll allow you the last 5 minutes, Joan or Eileen.
Okay, well, thanks very much, Louise, for introducing that. Just it's currently up on the IAFA website. So if you just type in IAFA accounting, you get to the website. Now, we have plans, of course, at the moment. It's just as a document, a Word document. So we have plans to develop the website a little bit, and to maybe, separate out the various resources so it's easier to navigate. And also we have plans that perhaps every quarter or every half year we will be asking the community to suggest other resources that they think should contribute to these existing resources. So it's a kind of to keep the thing alive, because obviously as time goes on things change, etc. So thanks very much, everyone. I hope you find that a useful addition to your teaching, etc. We did say we would address that. That was one of the key issues that was addressed at the last event. So just to summarise from my point of view, Eileen, you introduced the webinar by noting that sustainability was an evolving door, really. It's complete, and I think that the two guest speakers, Max and Lisa, have more than demonstrated that things are not standing still, things are moving quite quickly. So you've given us plenty of thought, Max and Lisa, about how we should maybe think about our teaching. Not only our teaching, but we need to speak to our colleagues as well, people that aren't in the room today, and we need to share some of these resources. So the video here today will go up. And I know for one, Eileen, I'm thinking already to share it with the whole world and his dog. You know, so I'll be doing that as soon as this is up. Max, you give us some fantastic ideas there about data and benchmarking, and how we might use those resources for both undergraduate and postgraduate. I thought that was absolutely brilliant, brilliant research opportunities there. But also giving us a really good idea of what's happening in Europe. And then Lisa, you've also been fantastic. You provided us a really good review of what's happening in Wave 1, but I think it wasn't just a review of the application of the rules, but all the problems associated with this huge change management initiative that's going on. And again, I think there has to be a way of capturing some of that. You've also given us, Lisa, some ideas about the Omnibus, and I'm a bit disappointed that things look as if they're progressing, but I did take some comfort, really, and this is really what I just want to say at the end, and what Max said. Everyone can make a difference. Everybody in this room can make a difference. You can make a difference by sharing the resources with your colleagues, sharing them with colleagues beyond your university, and even beyond that there. I think we all have a duty, this is my view from an academic point of view, to go beyond the minimal approach, which seems to be happening at the moment. We have a duty to influence, as you said, Max, tomorrow's leaders. So that's really a challenge up to everybody in the room, to do what you can and to try and make a difference in pushing this agenda on, because sustainability isn't going away, and it's really, really more important probably than the politicians and the rule makers are, you know, the due care and attention it deserves. So I'll maybe hand over to Stuart, who's the chair of IAFA, just for a final closing remark.
Yeah, so hopefully you're all able to hear me. And can I thank really everyone that's helped out make this event possible. Firstly, can I thank Joan, Eileen, and also Michael. I think just to underscore this link that we have with IASA over about the last year and a half. And I really want to thank Eileen for all of her hard work in making this event come about. So thank you very much, Eileen. Again, can I also thank Max and also Lisa. It's been fantastic with you along, and also our own Louise Gorman as well for all of her help. And the last thing just to add, just as we end, I also been a few notes about a few upcoming events in the new year, and we would hope to see you all at those. And thank you everyone for coming along, and I hope you have a lovely weekend. Thank you.
Bye.
Thank you. Bye bye.